Futures and forex trading contains substantial risk and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please take a moment to review the full disclaimer. Hello traders, Kevin from chartspots.com. Today I want to explain a bit more about the concept of weak and poor highs and lows, and more importantly, how you can take advantage of them. Before we start, I wanted to let you know that I will be on a webinar August 15th. It's hosted by NinjaTrader Ecosystem, and I will be covering trading strategies that you can use using the initial balance and the statistics related to them. I'll be mainly focusing on the ES, the S&P E-minis. However, the concepts I explain, you can use them on any product you like. So the link will be in the description as well, in case you want to sign in, and go ahead and do that. For today's topic, I made a brief slide to explain the core concept. So it's something I mention in my tweets very often, that I've seen a weak or poor high. What does it exactly mean? So weak is when the high of the day or the low of the day was exactly or within one tick, let's say, of a prior high or low of the day, or the overnight high or low, or the prior close or another close, or a prior volume point of control, or market profile point of control. Now, why is this concept important? When you see a low like that, it means that it's very likely shorter time frame money that's in the market. They are trading for a shorter time frame basically, which also means that they will close their positions more quickly than if the high or low was set by larger time frame players like institutions, things like that. What this means, and I will show this with an example in a minute, is that the low can have excess. I will also explain the concept of excess in the next when we go to the charts. A poor low, however, so the second column, that is basically, it's a very simple concept. It means that intraday, so within the same day, you touched the low or the high twice or three times or four times even, and that's also the same indication that it's shorter time frame players who are holding the market up or down, and that's typically something that can be faded at some point. Both of these, by the way. So let's get to the charts and have a look at some examples and how that typically plays out. So we're looking at the market profile chart of the DAX, at least how I have them configured. In case you're not familiar with the market profile, it's very similar to a volume profile, with the main difference being that it's based on time and not on volume. So what does this mean? For example, here you see the letter O, that's the open at 8 in this case, and the letter K, which runs all the way here, represents the price range that was traded during that first half hour, so from 8 till 8:30. Now, because not everyone is familiar with these type of charts, I will also show the regular candlesticks. So on this chart I have two indicators, so the regular order flow volume profile from NinjaTrader, and I will uncheck the hide bars, and the other one is the gaps and untested levels of indicator that you can also download on my website. What this does is gives you a tool to automatically track gaps and also the highs, the lows, and the close, and even the open if you want, of prior days, and it will draw them until they have been tagged in a new day, so the market traded through them. So it's a very handy tool which I have been using on my market profile charts mainly, but also on regular candlestick charts. So let's enable the bars, which makes it a bit more clear for everyone. Right here already we see what I would call a weak low. Why do I say that? This low was basically exactly or within one tick, as you can see here, from the point of control, which was on July 22nd. So that to me is an indication that shorter time frame players were holding the market up. So this for me in the coming days is actually when I see renewed weakness in the market, this is definitely a target for me. So that's how I use the concept of a weak low in this case. And as you can see, I mentioned the concept of excess. Excess simply means that you didn't have a double bottom in this case, and we tested the low on this candle here, and then the market started balancing higher but didn't test that level again, and we have some what we call single prints in the profile, which is generally a good indication that you have a temporary bottom. But in this case it's also a weak low, which is an interesting fact for the coming sessions. So basically if you don't have this indicator that draws this low automatically, you can simply put the horizontal line here in a certain color, and then you know that was a weak low we put in on a certain date. And when you see weakness in the market, some volatility going higher, selling pressure is there, then that's a good target to go for on your trade. Now let's see if we can find a poor low. I scouted one out right here. So what I'm looking at is this area here. So you see 3 letters next to each other. That means we don't have any excess, and you can see it in the candlesticks as well. So it was tested here, here, and here. It basically came within 1 or 2 ticks, but because my profile aggregates a couple of ticks in the case of the DAX, it shows up like that. So on top, this was basically not only a poor low, but also a weak one, because this is the prior day's low. And as you can see, there is very little difference between these two levels here. So that's a double both a poor and a weak in fact. And if you look how the market traded, so the next day already it was taken out right here, but again only by a few ticks, so that's a bit suspicious. However, you do have some excess here, but as you can see 3 days later, so we first traded up a bit and then started sliding again, and then we basically kept through that level on the 18th. So that's the basic concept. So you have the poor lows like this, where you have multiple tests of the low and that holds, and as you can see this was mainly a balanced day. Balance is basically a signal that longer time frame is not very active. There is not a lot going on, and that's really the gist of it. The other point is the weak low here, for example. Why I like looking at these on the market profile is because it makes it easy to look back in time. When I have a chart like this, I can easily see 5, 6, 7 days. I can even compress it a bit further, and it makes it possible to look at the last 15 days if you want on one screen, and it makes it rather clear where the high and the low was of each day, because for example this is 1 day, this is 1 day, so it makes that very easy to spot. And then with this additional indicator, the gaps and the untested levels indicator, you get these additional lines as well, which makes it even more easy. So give it a try. This basically works on any product, on the ES as well, on the NQ, RTY, because you have to think about what lies behind it, and that's simply the fact that these double bottoms, whether they're intraday or over several days or on very visual levels like a POC or volume profile POC, that's an indication that it's shorter time frame money, and like the name implies, they will not stay in the market very long, which gives you an opportunity to take advantage of that. Have a great trading week and enjoy.